Greetings, everybody. This is Jeff Scott, and welcome to this week's top-down review. I entitled today, New Highs on Nasdaq and SP500. Will the Russell join the party? I think that's a big question. Right now, it's the laggard. I would certainly assume that if the Russell joins the new high party, that the market's got a long ways to go. And as I listen on the web, I hear a lot of pundits, some saying top, some saying bottom. So it'll be interesting to see, but I think the Russell's going to really hold the clue. As always, it's for educational purposes only. I'm a doctor, not a broker. I am independent. I pay for my tools just like you do. I started doing these as an unpaid volunteer for HGSI, of helping their users learn how to use the program. My wife would say I like to hear myself talk, so I keep doing these. No one pays me. No one pays me to say good or bad things, and trading involves risks, and you alone are solely responsible. I have a number of people who I've learned from. Many of them are here, and I like to call my style of trading the be your own guru, and that I learned from a lot of different people. I have no brand, and I was able to put together tools and strategies that work for me. I own a lot of programs. Sometimes I can't find what I want, so I have people program them for me, which everybody, I think, laughs when they see my charts. I don't use the indicators to tell me what to do. I use the indicators to help narrow me down on the stocks I might want to trade. Then it's all about price and volume action. TradeStation and Thinkorswim are the heart of my trading. Yes, I have Interactive Brokers and others. I use Genesis for charting futures and other things. But it's really the indicator packages that I purchased from John Person and others in TradeStation, and what I do in Thinkorswim, programmed by Bob Meager, that are really important from a trading platform. And then for my post-market analytics, it's HGSI and EdgeRater. I use other programs. The SuperiorProfit.co Edge stuff is really cool. From a website perspective, highgrowthstock.com is not mine, is George Roberts' website for HGSI. The key things are a free 30-day trial, and my involvement is under investing strategies. You'll see hundreds of videos by me and Ron Brown and others. I always start my analysis by wondering where we are in the market. Every time this market feels like it's going to roll over, it takes another leg up. So right now it feels like we're in that position, but just think back how you felt in October when the market rolled over, and where you felt in December. There is no question when you get to that green circle of a buy, stage 2 markup, which we saw right after Christmas. That's when throwing darts at the market makes you money, because it really didn't matter what you went. Well, it mattered, obviously, but you had a really good chance of making money if you were long the market since December 26th. I'm not sure it's so easy anymore. And I did raise some cash over the last couple of weeks, and I continue to be on lookout for signs that this market's rolling over. That said, hard to argue with the charts. So since I'm still in between the left and the center, I have stocks, I've got some aggressive positions, but I have raised cash, and I'm ready to go the other way and be nimble if that's what the market says I need to do. Now, this is two things you should see there, green and red. It's the major sectors, financials, industrials, technology. The weakness is in the energy, which was the weakest at the end of the week. Here is a list of sector ETFs, and then some indices and futures. I just get a sense of market strength here. Green is good if you're long, and that's a pretty green-looking market. We go into, we can stay right here. You're going to see 3 slides in a row. In upper left-hand corner is E-mini. Upper middle is the Nasdaq futures. Upper right are the Dow futures. You have the Russell ETF here, the IWM. You have the VIX, and you have the dollar. So what do you see across the top? And I could have had more bars here. You see a lower left, upper right off the December bottom, and you'll notice that we hit all-time highs, and that's just annual highs, on both the E-minis as well as the Nasdaq futures on Friday, and we hit them on the Dow futures hit earlier highs, at least for this period. Have to go back and look if it's Dow futures or Dow's at all-time highs or not. Here, the Russell has broken above the 200-day moving average and held. You've got the 50 about to give us a golden cross in yellow over the 200. Not the same pattern. Look at the lineup of the moving averages and how clean the run-ups are on the other indexes. The VIX is down in an area of what's the word I would use? Well, it's certainly quiet, not a lot of volatility. And then the dollar is pulled back a little bit, but the dollar's been strong, which has not helped gold. On a weekly basis, you can just see continued how we've been in a very long downtrend for years. This is that October to December pullback. I will point out for those that followed me, we must have seen more Hindenburg omens occurring in late September, early October than I ever saw before. Certainly, I called your attention to it, and you should have been ready for the pullback. The VIX low, the dollar. Now, looking at the cash markets, we've got the S&P 500. Interesting here, it doesn't say I'm at a new high for the year or all time on the S&P on the cash markets. We are in the futures. We're very close. We are at a new high on the Dow, all-time high on the cash markets. On the, these are diamond ETFs. Can't tell, or at the Dow. We are right below all-time highs. So we had an annual high, but we're not all-time highs. You could see, unlike the top three, which are all near their highs, the Russell has been consolidating here at the 200-day moving average. A breakdown probably pulls the market off the highs. A breakout from here on the Russell will lead us to another bull run or continue the bull run. Another way of looking at this is in Genesis. I've got three horizontal rows. I've got the daily on top of the weekly, on top of the monthly. I have the E-minis, the Nasdaq futures. The third are the Russell futures this time, the NYSE cash index, and then you have the Dow futures. So what do you notice? You notice that on the monthly charts, all of them have had a pullback and are trying to work back to regain their highs. Everybody is in a buy. On the weeklies, everybody is in a buy, so you can see the V bottoms, which everybody says don't occur, but seem to occur more often than not. And then on the dailies, you can see, interestingly, the NYSE actually triggered a buy signal on Friday. The Dow has a sell signal, at least on the daily. Other than that, everything in all three time frames are in buy signals, which is very bullish. You could see that this buy signal is not, it's getting long in the tooth on both the daily and the weekly, which hopefully you've been making money. Rates moderated a bit. They pulled back a teeny bit on both the 10 and the 30. Lower rates are good for REITs, MLPs, utilities, dividend payers, and home builders. Bad for banks and insurers. I think I probably should have said the rates were steady. I didn't really see much of an influence on the market. You can't see it well, but you actually have a pickup on the spread between the 2 and the 10, and that's good because perhaps that means we're less likely to see a recession anytime soon. The AD lines are in white. I think it's just the S&P 500 overlaying it in yellow. I think the key here is on both the small stocks and the large stocks, new highs on ADs. If we look at the NYSE, also out to a new high, and pulling with it you've got the ETFs as listed here, the diamonds, the Qs, the spiders, IWM, the transports, and down here, even turning up with softer rates, are the TLT, the bonds. Breadth. All right, so breadth is not nearly as high, the number of stocks above the 200 as we saw in some of the prior peaks in the market. I had put this line in probably 2 years ago, and we're getting real close to that line, which was a place of reversal. We broke the line here, so it probably doesn't matter, but we are getting we're getting more stocks above their 200, and more stocks above the 40. We are not at extremes. To me, these matter at extremes. The 2121 in Warden, which is I think the 12-week or 3-month new high, new low. When I get up to this white line, I always see a market reversal. Sometimes you don't get all the way there. When I get down to this bottom line, I always see a reversal. In between is in between. We're near closer to the top than the bottom, but we're not at an extreme. Extremes matter. Short of extremes, a lot of these tools don't help me. The daily McClellan, new highs or almost new highs on the S&P. Look at how we're still in a downtrend if you look at the oscillator and the summation index. So the good news about this is, the bad news is there's a divergence, which could signal weakness ahead in the market and a breadth challenge. The good news is we're nowhere close to overbought levels, as we've seen on some of the prior pullbacks, such as this one right here. On the weekly, similar picture, divergences abound. Current buckets, 2/3 of the stocks in the S&P 1500 are above their Bollinger Band. That's bullish and not an extreme. About 10% of the stocks are above the Bollinger Bands, also not an extreme. HINDYs. So those who are new to me, a Hindenburg Omen is a signal that has 4 components. It includes both new highs and new lows, typically on the NYSE being above 2.2%. A rising weekly moving average of the NYSE. The McClellan has got to be less than 0, and the new highs have to be less than twice the number of new lows. So EdgeRater automates this. I hit a button, and what do I see? I see no evidence of a HINDY in months. Since we're at new highs, I think the risk of HINDY starts to increase. And if you look down here, you can notice we've got plenty of new highs. We just don't have a whole lot of new lows. I will continue to be vigilant. And why will I be vigilant in looking for these? I will show you when we look at the charts. Market tone. This was the low off the rise off the low in December. Notice how it was just a sea of green. We've got some yellow in here, which adds a little bit of caution, but still very strong. Sector strength is mostly good. Energy has shown some weakness. Now, I think it's time to retire this one. Ian used to talk about the canaries in the coal mine, and Ian's been gone for a couple of years. God bless him. He was such a great teacher. These were the stocks that he put together as his canaries. Price line is now called bookings. It has to change this, but it's adjusted in the chart. These used to be the big market leaders, and right now they're really not leading. Now, you did get a break off the 200. You're about to have a golden cross. That's bullish. I think the problem and the reason why it's mostly going sideways is you got stocks like Tesla that are dying while Amazon is approaching old highs, and they just start to neutralize each other. The reason we put lists like that together is it may give us a sense of the broader market. For example, we typically put together indexes at highs and recognize when those stocks that have been the leaders at those highs start to roll over, that maybe it's time to start getting out of the market. I just want to call out that this is a list that I put together March 3rd, and it was within days that it started to roll over. Then it went to higher highs. It looked like it was over. It hit the 50. We've had big kahunas, little kahunas come in. I've got a buy. My indicator went buy as well. And this thing's looks like it's going to go to new highs. So not over yet is the message that I see. Huge, let me say that again, huge earnings week both earnings and news week, I should say it correctly. On the news front, we got some income outlays on Monday. We have an FOMC meeting that starts on Tuesday. We've got energy reports as always on Wednesday, and we've got a Fed announcement and press conference. And then on Friday, I love how John Person calls it, not the monthly employment report, but the monthly unenjoyment report. So that is due on Friday. And if that's not enough for you this week, let's look what you got over here on the right. We got Alphabet, formerly known as Google. We've got Chegg, one that I've been playing off and on. Rig, give us a sense of some of the oil service stocks. On Tuesday after hours, we got Apple. We used to care about GE, but no one really cares about GE anymore, do they? We got Twilio, a big leader. We've got McDonald's. We got Tandem, probably my biggest winner of all time. We'll talk about that a little bit today. Pfizer, Amgen, Merck. So I've got a position, which I'll talk about, that I'm going to have to manage as well. On Wednesday, Amarin, a recent player in the biotech space, which is starting to move again. Royal Caribbean, Hilton, Cree, Qualcomm, and a big run since settling a lawsuit with Apple. On Thursday, Abiomed, Cigna. Cigna, I got to be worried about some of my holdings, and we'll talk about that. We got U.S. Steel, Arista Networks, Skyworks, Gilead, and then on Friday, we're not done yet. We still got some big ones like, well, WP Carey, a big roll-up, CBOE Capital Markets. This is a big week for both earnings and news. Thoughts? Markets continue to grind higher as the S&P and Nasdaq are hitting all-time highs. Dow actually pulled back a bit as energy weakened. Is the Russell ready to make its move to new highs? There should be a question mark there. How have you performed versus averages? Right now, my portfolio, if I include my Thinkorswim accounts, TradeStation, and Schwab, is up over 60% year to date. And you could see that I've outperformed, but boy, these are strong markets. I've moved some of my money, despite what one of the mutual fund guys, or excuse me, money manager says on TV. I moved some money to a annuity a few years ago because I don't like spending my savings, but the idea of getting a check every month from an insurance company and using that for income when I retire seemed to sound okay. It was a great product, I thought, because it had a floor where it could be no less than 2% per year. The problem is it's capped at 16. I never thought that would be upsetting to me, but this year that may turn out to be upsetting, although last year we gave back a lot of our gains, so we'll see. Interesting week, big earnings, including Apple, Fed meeting, monthly unemployment report or employment report, while rumors continue to swell around the Dems' response to the Mueller report and China trade. It is hard for me to not be leaning bullish here based on the charts. That said, I'll trade the market I get, not the one I think we should get. I am sitting on some cash, but did put more to work last week buying some of the oversold healthcare sector. There are many possible events that can trip up this market, but bull markets like to climb a wall of worry. Now, last week I said that I was building my healthcare buy list. I said that not because healthcare was leading, because one is the worst performing industry group, but I showed that even though it was the worst performing group, if you looked at the pace, it was one of the fastest growing groups over the last 1 and 2 days. So I thought I'd look at managed care. Also on the list are biotech and pharma. So I called out last week that I was expecting a rebound in healthcare. If I look at the XLV, let's see. I apologize. I know this is hard to see. I'll blow up the one I want you to see. Now here's the I don't need to blow it up. Here's the XLV. Now the important thing, 1, 2, 3, 4. This was last week. And this is Friday, Thursday, Wednesday, Tuesday, Monday. So this was last week on Friday. What I saw here was a doji, long-tailed doji, that looks like a potential reversal candle, kind of hammerish, although it did have a topping tail. Pulling back to support. And in my mind, that was setting up a reversal. What I also saw was the things that I saw you in the PowerPoint showing me that these were the worst performing industry groups, but all of a sudden they were starting to show some acceleration higher. So I thought I would go into healthcare. Within healthcare, I was interested in biotech. Let me see if I can pull this one up. I was sitting here with a similar candle, and I was interested in managed care. Now I will tell you that in Q, These are the outer boundaries, and stocks usually come back in once they go out relatively quickly. So I thought this was a low risk time to enter this industry group. So I don't show you my trades to brag. I show you the trades I took so you can get a sense of how I took this information and frankly turned it into money, and a couple of the different trades I took, because there were 3 different trades that I took to make money. Now, just to go back here, this is resistance. I saw a very oversold scenario. This is another indicator I looked, which told me on the longer cycles that we were getting a cycle bottom here as well. More reason for me to take the trade. But I don't have high expectations that this is going to go to the moon. I think the overhang in Washington is still going to be there. Plus, we're getting into May. So I wanted to take a short trade on a couple of different products. So here's what I did. Now, if you like this stuff, pay attention, because over the next couple of weeks, I am likely to announce when I'm going to hold my fall-winter meeting. Whether it will be at the same time as John Person, before or after his meeting, or separate, will depend on the weekend. He's already announced his weekend. I'm not sure I can do it that weekend. Here are some trades I took and how I turned this information into some cash. So first trade is, I think United Healthcare is a great company. I think its sector may be problematic, and that United Healthcare may at some point have to deal with the changes in Washington, which are not real positive for healthcare companies right now. But again, I'm buying this stuff because I'm looking for a rebound. So United Healthcare is UNH. And I'm going to make some changes before I talk about what I see on this chart. So I was looking at United Healthcare. Let me put it over here. Okay. That's not good. 1, 2, 3, 4, 5. This is the day that should be Friday. That was Thursday. Monday. That's Monday. That's right. There was no Friday market because of Good Friday. I'm sorry. Isn't it interesting? The 2 rallies occurred. 2 rallies occurred both after Christmas and after Easter. So this is where we sat on Thursday last week, before on the weekend. We had a big pullback in United Healthcare, failure at the moving averages. This is an ugly chart. Why would anybody want to go long? These gray bars here are called bingos. Bingos are baby out with the bathwater days. And if I see something that I'm interested in that gives me some impulse indicator that maybe they're going to recover or start moving, when I see this, I know I can get a short-term bounce. On Monday, I got a buy signal came in. The buy signal is my proprietary buy signal right here, and you can see it right here. And so what I did is I looked at it, and I believe I took my trades. And I saw on Tuesday or Wednesday, I took the trade. I'd have to go look at the date. I think I took it end of day on Tuesday. So let's go back here. So what did I do? I wanted a short-term trade on United Healthcare that could make me some money. I sold a put spread. What that means is I sold a $6.48 put at $2.30, which was above the price of the stock, and I bought a $2.20 put at $2.74. So I'm risking $10. I'm putting into my pocket $3 and what was it? 370, 360. Why can't I add? Putting 370 into my pocket. 374. Yeah, $3.74 went into my pocket. I collected on this trade $11,200, and I can now close this for $46.80. which means I keep the delta between the 11,000 I collected and the 4,680 I have to pay to get rid of it. So that's a profit of 65.40. Now there was zero investment. So you could say it was 65.40 versus a total risk of 11,220. So a little bit over maybe 60% of the potential risk. I'll take that anytime, especially in 3 days. I will close this trade out this week. I will put a trailing stop very close. And when I get hit, I'll be out. I have no interest in long-term ownership on United Healthcare. And again, based upon earnings, I would probably close it before earnings if it hasn't already closed. That was the first trade I took. The second stock I really like a lot is Humana. I like the chart. I like the short-term trade. I didn't say I'm going to marry it. So take a look at Humana. So let's look at Friday, which in this case was Thursday because there was a Friday holiday. So I had the bingo on Humana. I had a positive day on Thursday, and I said to myself, I'm going to look to buy the stock beginning of the week. I had a Jefferies proprietary buy signal on Tuesday. I bought the trade at the open on Wednesday. What is my expectation? My expectation is it probably runs up to 270. So I'm interested in playing this. How can I make money between where it was on Wednesday at about closing at about 250 and 270? So I created a variant of those have been to my live meetings, of my Scott synthetic. So let's talk about how I traded United Healthcare. So I went long with a modified Scott synthetic. As you could see here, there are 4 legs. I started with the Scott synthetic, or with a synthetic stock, which is I bought the call and sold the put. I created a credit of $2.60. But if I just did that, I'd have all the risk of owning the stock. And if this drops, remember it's in a downtrend, I could get hurt. So the Scott synthetic says then buy a put, a 240 put, underneath the 250 put, therefore capping my risk at $10. And remember, I got paid $267 to take the first. I had to buy that put for $643. So my net cost so far is $4 and change. And then I decided that I would also sell a 270 call. Since I don't think the stock's going to get beyond 270, I can take the $2 from that and actually reduce the cost of my trade even more. So I ended up with a trade that I paid out of pocket $7,120. And that allows me, I got a mistake here. Change this before I say it. And that allows me to control 40 contracts or 4,000 shares of Humana. Now over here is the P&L curve. And what it tells me on the Humana, the United Healthcare trade number 1, that I've capped my gains and capped my loss. And I hate this spread, to be honest with you, because I can only bring in a small amount and I'm risking a lot. I just thought it was a super high probability, and I'm not complaining. On the United Healthcare, it's the opposite. This trade is designed to give me a big upside. My maximum profits here are $72,000, $72,880 if it gets all the way to 70. My maximum loss on this trade is $7,120 plus the $30,000 in risk, or see, I got $7,000, the $30,000 in risk between, the $40,000 between the 250 short put and 240 long put. So there's a lot of risk there. So I paid 7,120, and this is the exact numbers within Thinkorswim today. In 3 days, this trade is up $22,380. So I could sell it now for $29,500. Now, this dashed line says, look, it only moved $8 from when I bought it. Yet the profitability on that $8 move is $22,380. So what am I going to do with this trade? I'm probably going to close it out quickly, take my profits. Maybe I'll sell half, but this, you don't get 300% returns on more than a few penny trade in 3 days. So I'm going to take it and be very happy. Third trade is on Merck. Not nearly as sexy, but let me show you the Merck trade. Merck, in my mind, is the king of immuno-oncology today. First thing I want you to notice, unlike United Healthcare and Humana, Merck is in a powerful uptrend. Merck had a deep sellback. Notice my sell signal picked it up here, pulled all the way down to the 200. So if I was looking at buying something, initiating a position in a stock that I like a lot, like Merck, that pays a 2.7% dividend, this is a place that I might want to buy. So let's look at where we were last week on Thursday. I have a doji in the midst of a bingo, the oversold indicator, sitting on the 200. The next day we didn't do anything. On Tuesday we moved up and I put out a buy order. So here's an opportunity in my mind to buy Pharma Royalty, a clear leader on the immuno-oncology front with a drug called Keytruda, and to buy it not for $84 a share, but to buy it for 70 something. So let's look at the trade I took and why I took the trade. I decided to go with the straight Scott synthetic. The Scott synthetic is like the prior trade without capping my gains. So notice capped gain on the Humana, capped gain and capped loss on the United and the Humana. And on the Merck, I've capped my loss, but not my gain. This is a lower cost of entry trade than the stock and lower risk than the synthetic alone. The synthetic alone would be buying a call and selling the put at the same strike price. Now, that would have been a good trade because I'm up $7,000 on those two alone. I lost on my protected put. I've noticed only 29 contracts filled. I had put an order out for 50, but I decided not to chase it. But think of this as mirroring a long call with a short put spread. Notice the duration is September, unlike the other two were 1 month. Why? Because I want this thing to be, I'm potentially initiating a position. Although I have to reconsider with earnings coming out this week. I could sell it, put the money in my pocket, and buy another spread back after earnings. Cost of the debit was $4,437. My profits 3 days later, after selling it, I could sell it now for $10,860, would be $6,423. That's about 144% gain in 3 days. Small gain in stock price from when I bought it. Huge profit. My plan on this with earnings, I think on Wednesday or Tuesday morning, is I will probably on Monday close the short spread. So therefore, I will pocket 325. I have to buy this back from 3.25 for a profit of about $2,500. I'll buy back my 70 put, and I'll leave my call in play. So I would have made $1,300 already So I reduced the cost of my trade through that short put. If there wasn't earnings right away, I'd probably let it run longer. So is gold the next oversold bounce candidate? I saw lots of people talking about gold this weekend. If we look at sector performance this week, pink or magenta is 1 day, brown is 5 days, and we can see almost everything was up over the last 5 days except for materials and energy. Now, if I look at a 5-day, what's been strong over the last 5 days sector-wise, healthcare has really rebounded and is now the leader. And you can see it came off the bottom. Now, I'm worried about that because I think there's resistance coming up on healthcare. This is the benefit of top-down. I picked off, I guess I scalped is the word I would use. If I look at the industry groups, and I look at the industry groups that are in, if I look at the materials, which is down here, materials does not look very strong. Now, it turns out that's not the picture I wanted you to see. What I want, and I can't bring it up now, if I went and I look at a 1-day window, you would have seen materials had moved up quite a bit on the 1-day window. So materials looked interesting. If I look at materials, these are the various groups in materials. And if I sort by a 2-day acceleration, what do we see has the fastest pace? Fertilizer, forest products, and then gold. So gold is starting to move up off the bottom. So that gets me interested in gold. So if I go down, and again, I look at here's what I want to show you. If I look at those sectors and I take it down to 1 day, materials is the fastest moving sector on both a 1 and 2-day pace. So I want to look in materials, and I'll look a little bit at gold. Problem is, think back of what I showed you on healthcare. We've already had the turn in gold, and this is resistance overhead. So I probably am less excited about gold, but I'm going to keep it on my radar. So now let's go ahead and take a look at my top-down review. I hope you don't mind me reviewing my trades, but I think this game is not all about picking what stocks to buy. Part of it is, how do you trade them? Do you buy the stock? Do you buy options? Do you sell options? And when I do my live meeting once a year, I try to spend time about what those trades look like and what drives my process of when to do a stock and option and which option trade do I take. We look at the markets today using Major Markets Plus and HGSI. I don't think I even have to go into the trade station. You know the markets are strong. The one thing that I look at, though, in trade station is, in this one here, is to start looking where my high jump bar is on some of these major markets. So, for example, on all of these, you're going to see been in a buy for a long time. This is the E-minis person buy. We've got green paint bars. That's bullish. We're within the envelope. That's great. That's 3. That red dot there tells me I got some MACD divergence. That's a caution flag, but that's only 1 so far. This is my weekly, and just to show you once, it's in a buy. It's just so far down there you can't even see it anymore. And my monthly, my high jump bar is at 96.75 on the E-minis. That means we are the most extended as we've been over the last 200 bars, at least 96% of the highest bar. So we have to be paying attention to that. We are getting long in the tooth. On the Nasdaq, we are at 97%, rest as before. On the small caps, we're going to be less, 83, because we're not closer to the highs. And on the Dow futures, we are, there's that new sell signal that came in, we're at 86%. So I've got some concern about those numbers. But just because I think we're getting close to reversal or to a point where we're likely to reverse, I'm not going to trade until I see evidence that that's actually happening. I'm still leaning towards the long side. Show you some of the major indexes. Here we have the S&P, and I'm just going to leave it on this for a second. These were the highs that I wrote on the cash markets, and we're either at or exceeding them. Here, let me go down to a cleaner view. So we have a big uptrend, and just, how big has this uptrend been? Well, let's compare and contrast. Let's look at from where we topped here in October to where we bottomed here, dropped 20% in 57 days. And where have we gone? 24% in 82 days. This has been a huge recovery. It also demonstrates that you've got to have a higher recovery than what you lost to get back to where you started. That's a huge move. As I look at this chart, it's bullish. It is extended. This is the high jump bar near the top. The weekly and daily bongo are green. Nothing not to love there. This is when we got the eureka in the market, which is a buy signal that came in. Strong market. All I could say about that. If I look at the Dow Jones Industrial Average, same thing. Even had a new. Now, interestingly, the person signal went sell on Wednesday. Mine went sell on Thursday and immediately flipped to a buy on Friday. It'd be interesting to see what John's PPS signal does. They're not the same signal, obviously. Weekly bongo turned red, showed me a little bit of or daily bongo rather, showed me a little pullback, but really not much happening there. It looks very bullish. If I look at the Nasdaq Composite, what's not to love except it's getting extended. And if I look at the Russell 2000 using the IWM, totally different picture. It sort of remains in this box, interestingly, that we did in March, and wondering, are we going to break out of this? And so let's go back, make that green. So has anything really changed? We're still in this. I guess I'll believe something's changed when we break out of that box. Maybe the box is a little lower now, but still a box. So we shall see. We're still sideways on the Russell, but I do notice that with us going sideways for a while, we've had a chance for the moving averages to catch up, and there's that golden cross that will probably occur this week. The dollar has been super strong, and that impacts on the market, impacts on bonds, it impacts on gold and silver. Gave up a little bit on Friday, but this is a super strong move by the dollar. And we already mentioned that the VIX is weak, and you could see it's kind of down to this complacency area. That was the word I was looking for. Is gold ready? It's oversold. Don't look at that's not gold, that's utilities. At some point, gold is going to be something you want to own. I've always run the risk when I start thinking that of going in too early. And I bet you if you go back and look at my charts, this is the resistance line that I was showing you. I'm not sure I'm believing in gold until it breaks above 123. I'm not chasing gold. That's the line in the sand for me on gold. Of course, I'll give up something if it gets there, but the last 3 times it's got there, it's reversed. Silver, maybe silver is already breaking above that line. I still think it's got to get above this 50 before I get excited. I'm not a believer yet. They're oversold, but they've got a lot of resistance on top of them. So that's where I look at the indexes. Then I go down and look at the industry groups, warehouse view, top down. And I'll tell you that a top down view for me, the time that it's the most useful are when it's like this. And the markets, there's so many things working. How do you narrow down what you're going to look at? So this is purely a force index view. I'm going to put my view with my trend on it. And what I add to that, if you look at my combo, and this will come out eventually. Wait a second. I just added extra weight if you have a lot of buys versus sells. And that may adjust a little bit what's in here as well as the ranking. REITs come up to the top. And several of those look familiar from my review this weekend. Weyerhaeuser, this is a REIT, not much way of earnings per share growth, pays a 5% dividend. Basing here has to break above the 200, had a kahuna, and my indicator went positive on Friday. Now let's go to a chart view because I'll show you some goodies that I put into this view. I know whether there's a doji because it'll hit me in red or green. There's my buy signal. You'll notice that not only did it have one of my buy signals, it also had a kahuna, a pocket pivot, mobile breakout from a squeeze, and pays a 4.9% dividend. Short term, it's in an uptrend. Longer term downtrend. I'll be happier when it clears that 200-day moving average. Pebblebrook Home Trust looks the same way, 4.6% dividend, better looking fundies. Similar picture over here. Ventas, in the office buildings, medical system, senior housing. Pull back to the 200, 5.2% dividend, good growth coming in. Not as exciting to me. Crown Castle, uptrend, pull back to the 50 with a new signal, 3.5% dividend. Prologis, this has a lot of the big office and distribution warehouses. Good earnings per share, smaller dividend, 2.6. I did like this one, Extra Space Storage, 3.3%, good earnings per share growth, breaking out to an all-time or new high. What else did I like here? I've liked over the last couple of weeks Americold, cold storage. Really big uptrend, lower left, upper right. Huge earnings per share growth. Revenue seems to be growing. Pays a 2.4% dividend. And another of the individual storage companies is Public Storage Group, 3.7% dividend. Not as tight as one of the others, but pulling back to support and moving up. So I did see something I liked. Now, down here, you'll see something. It says in this group, 78% are in a current buy, and 32 versus 20 had a new buy come in on Friday within the index. So this is a strong group with lots of new buys coming in. All right, that's interesting. What about banks? Lots of these. I don't see charts that I necessarily love, but if you look down here, 2/3 are in buys, 89 new buys today and only 18 sells. That's an overwhelmingly positive. This is a very common appearance, sort of a downtrend at best, sideways. Some are breaking above the 200, not much earnings per share growth. They pay a dividend. U.S. Bancorp looks the same. PNC, I like this one a little bit more. It seemed to be a little bit tighter moving up here. But it's the same pattern over and over again. SunTrust, same pattern. Hilltop broke out, even had a Bible gap up, but then gave up most of it. So when I can't really tell which to buy, I'll have to look at the ETF, which here's KRE, which is a regional bank ETF that's about to break above its 200, pays a 2% dividend, and you eliminate a lot of the risk from the individual names. Application software, cloud companies have been incredibly strong. Go to the lower right-hand corner, we can see that 80% of the stocks in this group have a buy signal. 17 new buys on Friday with 4 sells. Salesforce has gotten back to its highs. It's moving right off the 50. Mobile breakup from a squeeze. Kahuna, pocket pivots. 3 pocket pivot or kahunas in the last 5 days. This is super strong. I'm interested in this. Earnings are not until June 4th. Dropbox, I love the company. I'm not sure I'm ready for the stock. Workaday, this is another one. Looks just like Salesforce and the same suite of tools that so many businesses like mine use. Everything's green. Mobile breakout from a squeeze. No dividend. We're chasing them here, and that's the problem. Adobe set an all-time high on Friday. Earnings not to June 13th. Twilio, another one, a little sideways move here. Here was the chance to buy it on Monday off of the 50. It's probably not too late. The same risk. It's an overextended big mover with no earnings, but a leader under accumulation. Don't know anything about Pros Holdings. Big Bible gap up on Friday. I don't like it when it closes so far down low, certainly in a strong group. So this C Limited is one that I'm interested in again. I had a nice run on it, went sideways. It looks like it's getting ready to run. Again, this is a very strong group with a number of good-looking stocks in the group. Specialty pharma, marijuana is starting to run. Here's the king, probably as Canopy Growth Partners. 70 to 30 buys, 18 new buys on Friday. Pullback out of a squeeze, broke out earlier in the week. This looks interesting. It's run a little bit, probably not too far from my taste. Kronos, like other marijuana stocks, has sold off a lot. Animal Health, Zetas, Tilray. Boy, this one had, what a runner. This was a $300 stock. It just looks dead, except it's dead at a price of 50. So it's come down a lot. Certainly not going to chase that one. Don't know anything about this one, ZYNE. Is it Animal Health? Oh, of course. It's another marijuana stock. Breaking out. I don't know enough about this group to really give any insight. Amarin is a fish. They have a derivative of fish oil, reduces long-term deaths from heart disease in patients with bad cholesterol. The Diabetes Association recommends you take it. It's gone nowhere. I have a position here. I'm getting bored with it. I may give it a week. It's got earnings this week, so I'm going to have to evaluate. This one I also own. This is Axosome. Had a bull flag here, pulled down to the 17, had a buy signal, which is why I own it. I love this pattern, stepwise breakouts. It looks like it's going higher, under accumulation. These are stocks that have no earnings, that are story stocks, and you have to be very careful with them. GW Pharma is the first approved drug related to a cannabinoid for epilepsy, I think, in children. Pull back to support. It's an expensive stock that loses money. And that's it in specialty pharma. Biotech. This is one of the groups that got hammered because of concern about Congress, in this case, not just socialized medicine, but pricing. Right now, when one of these companies launches a drug, they can launch at any price they want. They use what's called what the market will bear, and the market bears a lot. And there's a lot of pressure. So if you're an innovator that doesn't have a drug on the market, your future price is very dependent upon how much you can sell your product for. And that's under assault. Repligen, big breakout on Friday, probably gone too far for my taste. Must have been on news. So in HGSI, just go more info from the web. FinViz will pop up and it'll tell me what happened. So it's buying somebody. Matches estimate. Must have something to do with what they're buying, because they had a big move. That might be something to follow. 2/3 of the stocks are in buys. Gilead, I can't touch this guy. It's a royalty in biotech. They've done great things for patients in hepatitis C and HIV. But the problem with having a major blockbuster that everybody loves is eventually others catch up to you, and what comes next, we're still waiting. Medicines company broke above its moving averages out of a squeeze with a kahuna. Don't know anything about them currently. Amgen, this is what historically a great biotech. It's kind of beaten down. Biogen got beaten down when an Alzheimer's study failed. I mean, why is this group so strong? Lots of money in this group. Celgene looks good, except it's under acquisition by BMS. Sage is another company that's not in my discipline. I'm a cancer doctor. They don't make money. They're developmental. I think they've got a drug either about to be approved or recently approved. Big move off the December lows, kind of going sideways. Hard to see why the excitement here. Bluebird Bio pulled back to support. No earnings for a while. Insight's interesting. Insight is a company that is potentially an acquisition candidate. That's the first thing I want to tell you. The second thing about Insight, I'm just trying to change this to weekly, about Insight is that it's got a drug on the market. It used to be a $150 stock, and then they had some challenges. And that was when there was a lot of hype about it being taken over. That's probably the biggest challenge that they had. And now it's pulled back to its 200-day moving average on the daily, moved up on Friday. This might be an interesting place to buy a stock that has earnings, that has great earnings per share growth, that has great revenue, and within their class of drugs, they have a market leader. The other ones that I liked, Array is one that has products on the market in a nice pipeline, new buy signal sitting on the 50. That looks attractive to me. Then you have drugs like companies like CRISPR, which are innovators that don't have marketed products yet. Sideways, but breaking above the 200. That'll be on my buy list. Anything else? Unicure pull back to the 50. If I wanted to buy this stock, I didn't say I do. It would be a time to start looking at it. So there's a number of interesting things there. Household products, I'm not a big fan of these, but you'll see why they're working. They have big moves on Fridays. 79% have a buy, 8 new buys, 1 new sell. Most pay a dividend. That one does not. Procter & Gamble, lower left, upper right, new buy signal, pays a 2.7%. Colgate, 2.4%. Clorox, 2.4%. Kimberly-Clark, 3.2%. Estee Lauder, a little dividend. And these are very nice chart patterns if you want to go buy consumer staples. And that's a good thing to do if you're defensive in the market. Medical devices have made me money over the last period of time. Boston Scientific has been a big leader. Pull back. Is it ready to come back? It had a kahuna on Thursday. Abiomed, kind of been beaten up. Why is this group so up high? 85% have buys, 7 with new buys. I don't know if I saw anything in this group that I really like. Inspire, I think, is one that's playing in cannabinoids, maybe not. All right, I'm going to finish up in a few minutes as I've got a dog waiting to go for a walk. Internet-based services, a couple here that I like a lot. We'll go through the first 5 or 6. Spotify, I'm not into that, even though it's got a new buy signal. VeriSign, what a beautiful chart pattern with a breakout on Friday. Makes money. It's probably getting expensive. Pocket pivot in kahuna, mobile breakout from the squeeze. Coupa Software does not make money, but it's good revenue growth. I love this company, and it's running again. I think this is a good time to buy it. You'll see it on my buy watch list. Shutterfly, the company's been trashed. I don't know anything about what's going on with the company. It's got a weekly high close doji. It's got a buy signal here coming out of a squeeze. It's hard to buy things that are that low, but I put it on my list to watch. Shopify, a big time leader. Problem with this guy is it's got earnings this week. Trade Desk earnings are on the 9th. This has been a big monster stock this year as well. So a lot of things to like in that group. Now, if I go back and take away my indicator, just look at the 2-day up, it's pretty much the same things. Infrastructure software gets added, some of the antiviral companies. Other than that, it's very similar. Let me take a look at the stock. I didn't find many things that I wanted to short. If I look at how many groups are to the downside, there was 2 refiners and 2 food stores. So shorting, not a lot to show you. I do have in my personal watch list, I came up with some stocks that are, I think if I had to pick shorts, these are where they would come from. You'll notice that there is integrated oils and export. 3 of the 11 are energy stocks. I'm a little bit worried about them. These are stocks that I'll just monitor because if they start to roll over, it might be a signal that I want to start looking at shorts. From a buy watch list, this is where I'll be doing my fishing from, especially starting on Monday. There's a huge number here. Which one stood out to me? Because there's not enough time to go through all of them. A lot of application software stocks, the cloud stocks. I like that C Limited I showed you. S&C Technologies looked perhaps a little bit less expensive than some of the others. It's got earnings per share growth. It's got growing revenue. Pays a small dividend and looks like it's breaking out. SS&C Technologies. Some of the banks on biotech, just to show you what I would talk about on biotech. These are not on great patterns. A lot of them are story stocks that are starting to move. Have no idea what Allogene does. Broke above its 50 on some volume on Friday. I will take a look at that stock this week. Array, I already mentioned. CRISPR is one of these gene editing companies, same as Editas. Insight, I mentioned. Those were some of the biotech stocks I like. But reality is, I like them because of a story. A number of REITs made my list. So I'll do this through midstream through 51. And then I want to go back and just show you the last 20 I liked. And then before I say goodbye, let me highlight a couple of healthcare medical equipment stocks. CareDx, cDNA, have no idea what they make, what their equipment is. This is a stock that had been a darling this year with a beautiful run up and now a correction. Frankly, when I look at it in this view of a weekly chart, and I might start looking at some trend lines, it's just pulled back to its trend line. Now I've got to bounce off that trend line on the weekly, and let's go back to the daily. And what do I see? I see a new buy signal, a pocket pivot, a kahuna, and a mobile breakout off of the 200-day moving average and off of its long-term support. That's interesting from a technical perspective. Dexcom is another in the diabetes equipment company. Deep sell-off with the rest of healthcare, putting in sort of a fry pan bottom, had a pocket pivot, kahuna, mobile breakout from the squeeze. And then my favorite of the last year and a month is Tandem Diabetes. For those who were not around a year ago, I gave this as a buy on April 8th. On Sunday, I did my video, and the stock was in the neighborhood of $6. It ran up, as you'll see, to the 70s, although it probably wouldn't have held it through all that. And it's pulled back now and ready to run again. Mobile breakout from a squeeze, a kahuna in a buy signal breaking above the 200-day or the 50-day moving average, and that's Tandem Diabetes. Beware, earnings are out this week, so I probably would wait until earnings. So be careful out there. There are ways to make money, and if you learn how to use options, not how I use them, how you want to use them, you can often make a lot of money in a short period of time. Have a great week. Bye, everybody. And again, for those who don't know, this is Halong Bay, I guess it's called, in Vietnam, where I was a couple weeks ago. Bye, everybody.